Thank you very much, Mr. Chair, and good evening to everyone. I think that I'm going to be the first speaker speaking in English, so I'll try to speak clearly. What I'm going to do in my presentation is basically to talk a little bit about the notion of green economy, because this is something new and evolving. And I'm going to share with you some of the key findings of a study that we have done on green economy. And basically it looks at, through the modeling simulation, it's a little technical in that regard, but basically it actually shows what would actually happen if you follow what the green economy is actually talking about in terms of our economy, environment, and social aspect. I think that what we have witnessed over the past decade is several concurrent crises, including accelerating climate change, fast spreading losses of biodiversity and the freshwater scarcity, as well as food price increase, let alone a fuel price shock in 2009 and recent financial crisis. Although the causes of these various crises may vary, the fundamental feature that cuts across all these different crises is one thing, which is the misallocation of capital. Although much of the capital was actually invested in property and structured financial assets and fossil fuels, relatively little has been channeled into renewable energy, public transportation, energy efficiency, protection of ecosystems, and biodiversity. And such a gross misallocation of capital was largely driven by our current economic growth strategies, which actually encourage the fast accumulation of financial, human, and the physical capital at the expenses of our natural capital. So it is becoming very clear that the business as usual is no longer an option. And UNEP has embarked its green economy initiative on the eve of financial crisis with a view that our prevailing economic paradigm is not sustainable and we need a new economic paradigm, which is green economy. Some of you might have actually heard of green growth, and there has been a lot of debates and questions about what's the difference and what's the commonality between the green economy and green growth. So at the outset, I would like to briefly touch upon the concept of green economy and green growth in order to avoid any confusion. If you look at the definition of green economy and green growth, in fact, you don't find much difference. Green economy basically seeks to drive the growth of GDP and jobs through shifting investment towards clean technologies and natural capital, as well as human resources and social institutions. But one thing that I would like to stress is that in both green economy and green growth, growth is an important component. Because still there are a huge number of populations lacking access to basic services, energy, water, and sanitation. And without economic growth, it is impossible to actually lift this population out of poverty. Although the economic growth doesn't necessarily always translate into a poverty eradication, but still we need a vigorous economic growth. There is no question about that. If there is any substantive difference between green economy and green growth in terms of its approach, is that green economy is very much focusing on the shifting of investment, private and public investment, as a decisive instrument to achieve growth, environmental improvement, poverty eradication, and social equity, as opposed to green growth, although it actually looks at the investment as a necessary instrument, but it's largely looking at the range of different policy instruments. Another difference perhaps between the two is how we actually consider the social dimensions, the issue of social equity, etc. In green economy, the social dimensions are considered as targets for shifted investments, as opposed in green growth, social dimensions are considered rather enabling conditions for green growth. So it goes without saying that in green economy, natural capital is considered important and critical economic asset. Today, a lot of natural resources are actually undervalued and mismanaged, and resulting in billions of dollars of economic loss every day. And I think that if you look at the case of Brazil, it becomes clear that basically the Brazilian government has included these natural goods and services in their balance sheet, and it actually shows that their national GDP increased from 6% to 17%. In green economy, as I said, it very much focuses on this shifting of investment. And growth in income and employment in a green economy is largely driven by this shifting investment. But this is an investment that reduces greenhouse gases, improving resource and energy efficiency, and protecting biodiversity and ecosystems. And these investments should be actually catalyzed and supported by direct public expenditure to a certain extent, and policy reforms. There is one thing that I would like to also emphasize when it comes to green economy. The UNEP has been providing a green economy advisory services nearly 30 countries by now. But there is no such thing as one approach to move towards a green economy, because every country has a different natural endowment. Some countries, there are more solar energy than the others, more biodiversity than the others. But also their economic structures varies country by country. So when we actually provide advice on green economy and assess their economy in terms of how they can actually transform their economy into a green economy, it's largely up to the country to look at their economic structure and prioritize their sectors and decide where they're going to actually allocate this investment for green economy. So there is no one approach to green economy transition. So let me turn to a study that we have done, which was launched last November. This study basically uses a macroeconomic modeling simulation to see and to compare the investment of 2% of global GDP based on the business as usual scenario to 2% of global GDP, but based on a green economy scenario, and to measure the impact of these different way of investing in 10 key economic sectors, not only in terms of conventional economic indicators such as GDP, but also in terms of its impact on employment, resource intensity, ecological impact, as well as carbon emissions. And what I mean by saying the business as usual scenarios as opposed to green economy scenario is that business as usual scenario means that the investment still continues to go into a carbon intensive infrastructure, fossil fuels, and the policies to promote this investment continues, as opposed to under a green economy scenario. The policies will be adopted to reduce, for instance, environmentally harmful subsidies. The subsidies actually goes into a fossil fuel, and incentives would be actually provided to direct investment in energy efficiency and resource efficiency, protecting biodiversity, etc. And the report finding provides the evidence that actually there are significant economic, environmental, and social gains by reallocating investment from the business as usual into a green economy pattern. So, for instance, let me show you some of the result of the modeling simulation. If you look at the GDP growth in the short, medium, and the longer term, in the short term, you don't actually see much difference in terms of a business as usual scenario and the green economy scenario. But in the medium and the longer term, it becomes clear that the green economy scenario would actually have a higher GDP growth in the medium and the longer term. Now, in terms of ecological footprint, and that actually take account of energy demand, water demand, and land demand. And you can see the last, the bar that actually goes down, that actually represents the ecological footprint, and it actually shows that under a green economy scenario, particularly in the longer term by 2050, nearly 50% of ecological footprint can be reduced. Let me take an example of one specific sector. I mean, I have mentioned that we have a look at the 10 economic sectors, what would actually happen in terms of GDP, employment, ecological footprint, etc. I think that the previous speaker talked a bit about this renewable energy sector, so I think that it's actually easy to talk about it. Renewable energy sector, in fact, is a sector where we do find a substantive and sizable investment is already happening, and it has increased. If you actually compare the investment that actually went into this sector in 2009 and 2010. And the modeling simulation basically shows that by investing, for instance, $650 billion US dollars over the next 40 years in this sector, it would actually raise the share of renewable energy sources in total energy supply by 27% by 2050, as opposed to under a business as usual, this share is going to be 15%. But also investing in this particular sector would accompany a lot of economic as well as other benefits. To start with, it would actually address the energy poverty. There are still 1.4 billion people around the world who actually are having a limited access to energy and electricity. It would also contribute to, for instance, 1/3 of the total reduction of greenhouse gases achieved by 2050. And renewable energy sector was outstanding in a sense that in terms of its impact on employment, it turns out that it would actually create quite a bit of many new employment opportunities in this sector. But it doesn't actually happen automatically. It would actually require quite a bit of the solid package of policies that would actually support investment in this sector to realize all these benefits actually happen. And then, each country has a different circumstances in the case of renewable energy. So when they actually provide incentives to stimulate investment in this sector, the government should carefully craft their policy package in such a way that it would actually deliver the full potential of the investment in the renewable energy sector. Let me say a few more words about this impact on employment, because I think that it has received quite a bit of interest from many countries and from many governments. What we have done is we have looked at the impact of this green economy investment on employment across all 10 key sectors, and to see what would actually happen in the short term, medium, and the longer term. And one thing that I can say is that the report and the study acknowledges that in the short term there will be some job losses, obviously, because the jobs in the fossil fuel intensive sectors, there will be losses, and some other sectors, particularly fisheries, in the short term, the job losses are inevitable in order to move towards a green economy. But in the longer term and over time, the study makes the case that the number of new and decent job creations in all sectors, but particularly in renewable energy, waste, and the sustainable agriculture sector, will offset those losses compared to the former brown economy. Of course, this creation of a decent job doesn't happen automatically. It would actually require investment to reskill and retrain some segment of workforces, so that we can ensure a fair and more smooth transition to a green economy. And perhaps the resources for this kind of investment can come by cutting the environmentally harmful subsidies going into a fossil fuel area. There is a misperception that often the green economy or the green growth is the agenda of developed countries only. But in fact, the transitioning to a green economy can serve as a key catalyst for growth and poverty reduction in developing countries, particularly because there is inextricable linkage between poverty alleviation and wise management of natural capital and ecosystem. Of course, a successful transition to a green economy would require a number of enabling conditions. I think that the first step is to address these environmentally harmful subsidies going into a fossil fuel. In 2008, according to the study by the OECD and IEA, it shows that the fossil fuel subsidies exceeded close to 650 billion US dollars. And by reducing this subsidy, we could nearly save 1 to 2% of global GDP. There is a huge amount of subsidy going into a fossil fuel energies. Another enabling condition, of course, is a robust and sound regulatory framework to reduce any investment risks and increase the confidence of investors and markets. Still, there are quite a bit of price distortions because a lot of externalities are not actually taken into account. And for that, taxation and smart mechanisms would be useful. But also a direct public investment is required for capacity building and training to move towards a green economy. Now, you would wonder if you heard the first part of my presentation saying that we would actually need 2% of global GDP invested in a green economy. Where does the money come from? So the financing green economy is in fact important component of the whole picture. And one thing that I would like to highlight is that investment, particularly in clean energy sector, is already happening and it's growing. But also, I think that the fiscal policy reforms could play quite a bit of role in terms of mobilizing resources required to move towards a green economy. As I mentioned, cutting down the environmental harmful subsidies, particularly for fossil fuel energy, would create a huge fiscal space and actually makes this public and private investment possible for a green economy. A taxation could also increase the revenues, and public finance to leverage private investment is another important part of the financing green economy. There are some innovative mechanisms that are actually being developed and applied already in the area of climate change. RED is one such mechanism, and payments for ecosystem services, for instance, could mobilize resources for green economy, but at the same time to properly value our natural resources and ecosystems. There are some countries who are actually taking innovative financing initiatives for green economy. I think that the UK's Green Investment Bank is a good example. In 2010, the UK government has announced that it would actually create 1 billion pounds of Green Investment Bank to invest in the green infrastructure. And it is to actually share the risks in financing green infrastructure where the market on its own cannot accommodate the risk. One thing that is interesting about this Green Investment Bank is that it would actually seek to make a return on investment and reinvest that return into a green infrastructure financing.
Professor Kim.
Okay. Just let me conclude by saying that there are still quite a bit of knowledge gaps to be filled in when it comes to green growth or green economy theory and practices. And in order to do so, the UNEP, together with the OECD, World Bank, and the Green Growth Institute, has established the so-called Green Growth Knowledge Platform. And its mission is to identify knowledge gaps and address the knowledge gaps and disseminate the best practice that can be replicated by many different countries to make a transition to a green economy. Thank you very much.
Thank you.